Hey everyone, I wanted to quickly chime in here as we start working our way into the second half of January 2021 and just kind of alert people with what we consider to be, and this is a very short-term oriented sort of outlook, if you will, but we do think that things are getting quite overbought. I'm going to go straight to the charts and kind of walk you through the case here. Before we do that, though, I want to just make sure that we don't lose sight of the time frame. We at thestudytrader.com and also at Blue Marlin Advisors, our RIA company, our investment management company, we remain very bullish in terms of risk assets, equity space, different sectors, different parts of the market, all that kind of stuff. As we look towards, this maybe the second quarter or so. So for the first number of months of 2021, we remain very bullish. However, we think what's playing out here from a seasonality perspective is typically what tends to happen. And of course, these are average numbers, but I brought along this chart. This is your longer term average of what the seasonality for the S&P 500 looks like, and risk assets tend to fluctuate within that or correlate to that quite well. So if you look at this a bit more closely, and I'm going to try to zoom in a bit more so everyone can see this, but the months of January and February, I got to do this larger again. The months of January and February, you can see tend to be quite choppy. January starts off with a bang, and then it kind of tapers off, and February is a bit choppy. So I don't know if this is going to happen again this year, but the odds are, of course, there. This is a long-term average. And when I look at what things have done here coming out of the gates, risk assets, look at, for example, small capitalization stocks, then I have to say that we want to be short-term cautious. So, for example, right now, as I'm recording this on Friday, the 15th of January, right now, 2 weeks in, not even quite 2 weeks into the trading year, the Russell 2000 month to date is up north of 8%, close to 9%. That's a big start to the year. That would be a good performance for the entire year on an average year, to be honest with you. So we think small capitalization stocks, as much as we really like them going forward, I think they're overbought. And we're setting ourselves up for some bad reward to risk here for the next days, maybe more like the next number of weeks, maybe through February. Semiconductor stocks, the SMH ETF. So these are companies like Micron Technology, Applied Materials, Intel, and so on and so forth. Very overbought. Again, not bad companies. We don't dislike them. We like them going forward. But for the short term, they do look risky. I'm going to give you even a daily chart here, and you can see how steep this ascent has been. This is purely optical, but if you fold in the historical context I just gave you, this is starting to rhyme. Another part of the market, how about a company like JP Morgan? Love JP Morgan. It's my alma mater. But I think heading into the earnings here, which are literally about to happen here within minutes as of me recording this, I don't know what the stock's going to do after earnings immediately, but very overbought. If you look at it through the lens of a weekly chart, weekly increments here, you can see we've had one hell of a run, peaking to all-time highs. But again, I think a pause here is in order. Moving on, a few more. How about some individual stocks? And these are, again, individual stocks just to kind of resemble what we see here. Look at a company like Shake Shack, SHAK. I have nothing against the company at all, but you can see a vertical run to the upside, up, 20+% this week alone here as I'm recording this. How about a company like Crocs? In full admission, I actually own a pair of Crocs. They're hideous as all can be. I know there's some better looking ones. I like them, and I stand by that. But the stock has gone vertical. Look at it more on a daily chart. Again, we're seeing a lot of parabolic chart chasing. Look at a company like Plug. That's all the rage these days with Tesla and Nikola and all these companies. But a stock like that also going vertical. So I've given you a little bit of a taster of what we think. And by the way, if you're curious what could be potentially a trigger to all of this, to some sort of a mean reversion move, look at the dollar index, which... the XY is a ticker symbol. The dollar index, which we suspect has further downside at some point this year, but it's starting to stabilize. And there's an inverse correlation, a very strong inverse correlation between risk assets and the dollar on a rolling basis. And it's been like that now for some time. If the dollar were to go up, we think risk assets come under pressure. So anyway, folks, I hope this is helpful. Give us a thumbs up, like, leave any comments, share this if you like this. If you have any comments, smash the like button, subscribe, and we'll see you soon.